Welcome to S&P Capital IQ's monthly loan market overview clip. I'm Steve Miller, a member of the Leveraged Commentary and Data team. Over the next few minutes, we'll review recent market trends. In preview, loan prices rode higher again in February on a wave of strong technicals and positive investor sentiment. Looking ahead, participants are bullish for March, assuming, of course, no disruptive shocks intrude. The S&P LSTA index climbed 79 basis points in February, pushing loan returns for the first 2 months of the year to 3%. In part, loans were part of a broader capital markets rally that carried the S&P 500 up 4.8% in February. Closer to home, demand for loans outran supply. For the loan market, February was a case of water everywhere and not enough to drink. In response to favorable conditions, issuers unleashed a flurry of opportunistic transactions that pushed new issue volume to an 8-month high of $18 billion. It was a hollow increase, however. With repayments also up, the amount of loans outstanding actually contracted by 0.5% in February. On the other side of the ledger, even though inflows into loan mutual funds were effectively flat, CLO issuance jumped to a 3-month high of $2.3 billion, and managers say allocations from pension funds and other institutional accounts picked up. The combination of shrinking supply and rising demand bolstered market tone. These trends explain why the average bid of LCD's flow name composite, a measure of the 15 most liquid loans, tacked on another 58 basis points in February to end the month at 98.2, just inside of its post-credit crunch highs from early 2011. The rally was most pronounced among high beta names, several of which, such as Caesars and First Data, extended and partially repaid. In the new issue market, the story was similar. Average clearing yields sank to a 7-month low of 6%. Drilling down, BB loans generally cleared in a 4 to 4.5% context, with several seasoned issuers printing even tighter. For single B loans, the middle of the fairway in February was 6 to 6.5%. Issuers took advantage of strong leverage finance demand to uncork $17 billion of amend-to-extend transactions in February, the second most on record. Likewise, loan for bond takeout volume jumped to $3.5 billion. That was the most since May and followed a 6-month drought. Strong conditions also ignited a revival of opportunistic deal flow. Dividend-related loan volume climbed to $7.4 billion over the first 2 months of 2012 from just $1.3 billion in the entire fourth quarter. And even repricings are back, though volume remains far below the pace of a year earlier. The loan default rate was steady at 21 basis points in February, not far from its near-record low of 17 basis points at year-end, and well inside the historical average of 3.5%. In general, managers expect default rates to climb as the year grinds on to about 2%, give or take. To wrap up, a few final points. By all accounts, M&A activity will continue to disappoint in the months ahead because sellers and buyers remain too far apart on price. Some participants speculate deal-making could increase in the second half as earnings growth slows, allowing bid-ask spreads to compress. In the meantime, issuers will stay focused on opportunistic transactions. In February, for instance, dividend-related financing jumped to a 7-month high of nearly $5 billion, and the market even saw a smattering of repricing, though the amount involved was modest at $4.3 billion. For these categories, the pipeline is robust. Finally, the CLO market gained more traction in February. All told, 6 managers inked $2.3 billion of new vehicles. The latest deal, a $362 million deal from ING, printed its AAA tranche at a recent low of 145 basis points over LIBOR. Managers expect CLO issuance to continue in the $1.5 to $2 billion band in the months ahead, barring any disruptive exogenous events. That brings us to the end of our overview. For more information on the loan market, you can check in with us on the web or via LinkedIn, Twitter, or Facebook. The links for each is in the description of this video below. You can also download this presentation at slideshare.net.